All right, good evening, everyone. My name is Doc Severson. I will be your host tonight. I'm particularly excited to be addressing tonight's topic as this one has been inside of me for a long time waiting to get out. So this is one of my favorite styles of trading, and as we'll see, there might not be a better time to start with this style of trading going forward with the volatility that we have. So before I get started tonight, here is our standard risk disclosure, which essentially says that if you don't treat this like a business, you've heard me say this before, this will be the most expensive hobby you'll ever undertake. I will not be recommending anything tonight for buying nor selling. So we're not going to be doing any live trading tonight. This is our copyright disclaimer. Please do not distribute tonight's material without express permission from us. TheoTrade is an education trading firm. If you don't know us yet, we're based out of Scottsdale, Arizona, specializing in education for options, futures, and stocks. We are started by veteran professional traders who are first and foremost experienced trading educators. We are not a registered advisory service nor a brokerage firm. Some of you know me, some of you do not know me. Welcome aboard. If you have never met me before, I'm a husband, father of 3, student pilot, reformed engineer, also a poster child for Rogaine, you know that. I quit my 6-figure telecom job to trade full-time, and that was 12 years ago. So I am in the options, futures, technical analysis, and NLP, which stands for Neuro-Linguistic Programming Coach, at TheoTrade for the past 2 years now, coming up on my 2nd anniversary as of April 1st. I like to think of myself as a bit of an innovator. There's always a different way. There's always a different way to reach people and to communicate concepts in a new way. So I've been trading for about 21 years now, and of those I've been using the thinkorswim platform for about the last 12. And for those of you that didn't know, I actually do have a book out there on Amazon, which is called Hacking the Holy Grail. It's about this this notion that everybody's looking for the Holy Grail in trading, and it's, well, there it is on Amazon. But it's actually between your ears. A little bit of housekeeping before we get started tonight. Yes, you will get a recording of tonight's session. Yes, you will. I'm going to be moving very quickly through the material so we get to everything and respect your time. If you've been to one of my webinars before, you know that I end these things on time. So please hold your questions until the end of the session. Please work with me. I've had to learn this the hard way, not to do this, because I love to help people and I get distracted easily like anybody else, but I've had to really kind of lock down on this. Otherwise, we end up doing a 3-hour webinar instead of a 1-hour. So we do have staff online. If you have admin questions, if you can't get something working, just raise your hand, yell, and somebody will help you. So I mentioned this before. Please follow along in the workbook if you have it printed out. So it's available for download at the little GoToWebinar toolbar that you guys have. And it's called Futures Workbook March 2018.pdf. So it's a little red Adobe icon. Just click on that and download it. Or you may have already done that. So got your workbook? All right, let's go. So if you do have this in front of you, just fill in the blanks. This is the participatory webinar, right? Make notes to yourself. Fill in the blanks. Write things down as you think of things to do. And we also have action items down there, which are at the bottom of each page. And these are things that I recommend that you consider doing. Please do. Okay, some learning objectives tonight. What are we going to cover? What are futures contracts and why trade them? I do realize that many of you on here tonight have traded futures contracts before. That's okay. We will be covering much more than that. What is a trading framework and why we need one? What futures contracts should we be trading? What equipment do we need to trade futures? How do we earn the right to trade live capital with futures? My overall technical trading approach to futures, how to manage your trading risk, and how to scale up when you've earned the right to do so. We'll finish out tonight with next steps. Where do you go from here? Yeah, will there be a test at the end? Maybe, maybe, so pay attention. So if you've been watching markets lately, we do have a lot more volatility to work with than previous years. The market pretty much went to sleep at the end of 2017. It was a big yawner, and finally we've got volatility back. We have it back in all of its gloriousness, right? So if you have the time to dedicate to this, these are some of the best conditions that you'll see for intraday trading. They really are. So before you just jump in though, please wait a second. I have some steps to success that you may want to follow. So let's go over the ABCs first before we get into this. Futures are regulated by the CFTC and the NFA. So here's one of the big advantages of futures, that you are not regulated by the pattern day trader rule. Other instruments like stocks and options are. So if you have less than a $25,000 account, being a pattern day trader in stocks and options is a real drag. It's not very much fun at all. It is very oppressive. These regulations do not apply to you if you're trading futures contracts. So this gives you more freedom intraday. However, we do have to be aware that the knife cuts both ways, right? We will discuss risk management in a minute. Futures are the ultimate directional instrument. They are very pure to trade. So they don't have, so for any of you that have tried to trade directionally with options, you realize that there's a lot of moving parts to an option. All of a sudden you've got time decay, you've got sensitivity to volatility, you've got gamma happening with an option. There's all kinds of things moving around inside that contract. And when I first learned about futures, my reaction was, you're kidding me. That's it? All right. So, and I was very skeptical at first. I was looking for the hidden traps that were involved with futures contracts. And I came to find that there really weren't any. Yeah, you eventually have to roll them over, and there is a little bit of cost to carry, but if you're just trading them intraday, it's not a big deal at all. You don't even notice it. So it is really a truly ultimate directional instrument. So there's far fewer traps to know to trade futures. Normally requires a margin account. So you can't just boot up your broker's interface and start trading them without signing your life away to say, yep, you need a margin account with these. And the margin may change too. With the recent volatility, what we found was that they actually did change the intraday margin of some of the futures contracts out there. So if you're a little bit capital constrained, you found out the hard way for that. So make sure you have risk capital in play for these. So tonight I'm going to be going over the 10 steps to success trading futures. So I always like to frame things in a way that makes sense to people. I don't want to struggle to make a point with folks, and so I tend to, to add those bright Fisher-Price colors and things like that. So futures are the simplest directional instrument to understand and trade. They really are. No surprises. You don't have to pay dividends or anything like that, all right? So go short for bearish, go long for bullish. The concept behind futures trading is very simple. But folks, you know this, it's not that easy. If it was easy, then everybody would be doing it. Everybody would be doing it. So what I found is that most retail traders stumble into futures trading. Somebody talks them into trading futures, and then what happens is after some experience, they stumble right back out because they weren't prepared. Again, that knife cuts both ways if you're not prepared for this. It does not have to be difficult. It does not have to be difficult. You just need to be prepared and earn the right to trade live capital. So here we go. I like my visuals. Let's get started with the top 10 steps. I want you to think of things. I always tend to think of trading strategies as a pyramid. I am a big believer in pyramids because pyramids have a great anchor of a foundation, don't they? So we're going to start this one off as a pyramid, and we're going to put that foundation in, and those steps in the foundation we'll discuss in a minute. And on top of that foundation, we're going to talk about things like research and development. Guess what? Yep, you have to bring out your inner engineer to understand how to build strategies. Now, it's not as difficult as they make it sound, though. From there, Kaizen is a Japanese term which means continuous improvement. This is the way you got to be. You got to have an attitude that you're never really truly done when you're trading futures, because guess what? There's always something to improve on, number one. And number two, markets are always changing. So just when you think you have it set, markets will open the trap door. You have to anticipate change on a daily basis. You will get it. And that's what we're seeing right now. And then finally, talking about acceleration. How do we accelerate our strategy? How do we take all this momentum and then really turn up the heat to 11? Okay, so this is what we have here. Tonight what I'm going to be going over is the foundation, steps, research and development steps, steps for Kaizen or continuous improvement, and then finally showing how to accelerate your returns. So number one is contracts and markets. So some people are already asking questions like, what contracts do you want us to trade, Doc? Well, funny you should ask that question. So there's dozens of possible futures contracts that you can trade. I am a firm believer in starting with the U.S. Index E-mini futures. Please do not start with the oil contract. Please do not start with the gold contract. Please stay away from commodities to begin with. Please start with the U.S. Index E-mini futures. These have the following: the volume, the liquidity, the smaller leverage that we desire to get started with. So some of the other ones are a little bit bigger. They're a little bit more difficult, and they move a lot more, and they have a lot more leverage. So there's four major futures markets that are out there. First of all is the S&P 500 E-mini, which everybody knows is the ES. Now, I chart this every day. I watch this every day. For reasons that I'll explain in a minute, I really don't trade this contract. I don't trade this contract. We also have the NASDAQ E-mini, which is known as the NQ. We have the Russell 2000 E-mini. This used to be the old TF contract, and now it's back under the CME as the RTY. This has been around for a few months now and is making a startling comeback. Great to see it again. And of course, we have an old standby, which has been ramped up lately. And so the volume is coming back in spades, and this is the Dow E-mini, or the YM. And this is also on the CME and off the CBOT, so it's no longer the mini Dow. So all of these feature more volume during the U.S. cash session. So what you'll see is, and let's do this. Let's get the, I got to get my little drawing tool out here. Excuse me for a second. So what you'll see is during the day, you'll see a little bit of a bump like in the European session. European session will come along, and then the U.S. session will typically show a big peak in volume. We'll tail off midday, and then we'll have more volume near the close, and then eventually we'll tail off again, and then you'll see another little bump for the Pacific session. But some of the bigger ones is that we actually do have acceptable volume now in the European session. So during the Globex, these are called Globex hours, while this is the U.S. cash session right in here. Okay, so this is the majority of the volume, but we do have acceptable volume during the European. So this trades Sunday. Now I'm going to give it Eastern times here, which are New York. 6 p.m. is when the futures start to trade in the Globex. And they go all the way till Friday at 5 o'clock. Now they do halt every day for maintenance. Every day you have a little bit of halt, but essentially you have an instrument that trades nearly 24 hours a day during the trading week. Okay, so the leverage per contract is very important for us. Now the S&P 500 trades $50 per point, and there's 4 ticks per point. So each tick is worth per contract $12.50 to you. The NASDAQ is has a little bit less leverage. $5 a minimum tick. There's 4 ticks per point, or $20 per point. So if you have a single NASDAQ contract, and say you go from, let's just say 7,000 over here, 7,000 up to 7,001. You're going to see this go in 4 graduated steps like this. And each one of these is going to be worth $5. So if you bought one contract and bought it here, then sold it out here, you'd make $20 minus commissions. So this is what we're talking about with ticks. This is what a tick is, a minimum. It's the minimum possible price movement. And the ES contract has 1250 minimum ticks. So this is obviously a bigger contract. The Russell E-mini, also a $5 minimum tick, but it's got graduations. It's got 10 different ticks per point. So it's $50 per point. Little bit more leverage, but the Russell doesn't move as much. And then finally, the Dow E-mini, or the YM, $5 minimum tick, $5 per point. So each point is $5. There's no graduate, there's no Dow half points or anything like that, even though that would be kind of cool, but it's unnecessary. Let's talk about volume for a minute. Volume on the ES is about, right now, about 1.5 million. That's a lot. There's a lot of volume in there. You can think of so many different things that E-mini contracts are used for, but the ES is used for all types of industrial strength hedging. The NQ has got less volume, about 400,000 daily. The Russell is 150,000 and increasing. It's getting bigger. It's growing. The Dow right now has got about 200,000. So you can see there's a clear difference between some of these contracts. As long as you have enough, that's all you care about. Now let's also talk about ticks and price steps. Now this is something where it takes you a little bit of experience to see this sort of thing. But what you'll have is, I've got a chart here of the ES. This is the S&P 500 contract. And what you'll see is in the space between 27.96 and 27.95, you'll see 1, 2, 3, 4 different ticks in here. So this is 27.95 and a quarter. 27.95 and a half, 27.95 and 3/4. Each one of these is $12.50. So if you bought a contract, went long here at 27.95 and it went up a quarter point, you just made $12.50. Now you made 25. Now you made 37.50. Now you made $50 per point. Okay, so the ES has a little bit more leverage to it. What I don't like with the ES is that it's not as granular, so you end up with a lot of these sort of things. You see the sort of the step functions involved in this, the minimum tick sizes. The other contracts, you don't see this as much. The other contracts that I discussed, you don't see this as much. So the number one step to success, let's narrow it down here. I want you to focus on one contract. I want you to focus on one contract. Easiest to start with the NQ or the YM. It is. If you're starting out, or even if you do have experience, I want you to consider only trading one of these until you hit your goals. ES to me is too large, it's too chunky. I know some people that love it. They love trading it. But if you're a technical trader like myself, I find it to be too large, too chunky. The Russell's getting better, but it is easier to learn on the YM and the NQ. The price action is just more linear. So I've traded both the YM and the NQ. I like them both. I think they're excellent choices, either one of them. Sometimes the YM is a little bit better to start with because there's so many handles. Remember, you just have so many places where you can jump on and jump off. You are never stuck waiting for a fill. Not that I'm really ever stuck waiting for a fill on the NQ. There's just so many more places to get on and get off with the YM. So for that reason, I think for a new trader, for a beginner, I think the YM is really the way to go. But I'm never gonna look down on the NQ. The NQ is excellent as well too. The Nasdaq's leading the market right now, so there's all that volume and all that attention there. So experiment with simulated trading. Settle on one. See which one that you like the best. See which one you like the best. Okay, now we're going to move to number 2, framework. So we're in the foundation layer. We're going to go to the second section here, and I'm going to talk to you about framework for a second. Most retail traders don't use any form of framework to manage their trading. Now, many of you have never heard this term before. Don't know what I'm talking about. What's this framework stuff? What are you talking about? Is that what you put a picture in? Nope. Okay, so this may tickle some memories here for you. So you're supposed to come up with a business plan, right? You have a business plan for your trading? Or do you have some type of goals? Do you have goals written down for your trading? Maybe you do, maybe you don't. Maybe they're sort of just loosely stored up in your cranial matter. Do you have a trading plan in place to govern how you're supposed to trade? Well, maybe some of you do, maybe some of you don't. Maybe you're just sort of loosely going along with what you believe is supposed to be what your trading plan is. Okay, so goals should lead to rules is what you put into the market. And once you have that, if you take any trades, then you're going to get some kind of results. And now corrections, this is where I differ from many traders. So this is where a performance loop should be, is we just continue going this loop up and up like this. But this is not the way that most retail traders use a framework. This is their framework. They say corrections, well, I lost 2 trades in a row, so this strategy is no good. So I quit, and I'm going to go back to my hunt for the Holy Grail. Guess what, guys? That is not how you operate a framework. So trading something a couple of times and then quitting, saying, well, this is no good, or this strategy is no good, or I hate these charts, or this indicator's no, oh, look at that shiny, bright new penny across there. It's a new strategy, which guarantees 95% winners. I think I'll go for that. This is what we do. We give up too soon. We all do this. So we don't use a framework to manage our trading. So we need a business plan specific to the strategy. We need a trading plan specific to that strategy. We need to collect and journal data from our trades. We need to make analysis on our trades. We're not doing this just to give ourselves busy work. We're trying to learn from each trade. Each trade is a gold mine, especially a losing trade is a gold mine of information should we stop to pick up and inspect it. And then you can use more advanced techniques like Pareto analysis to be able to sort into the number one causality for your losses, and then find the root cause. Really dig and find the root cause behind your losses. That's where the gold is, folks. And then do this feedback loop into the next series of trade. Make adjustments. There's a reason why we put a steering wheel on a car. It's to make adjustments. We're supposed to make adjustments. If you fly from LAX to Hawaii, you're off course 99% of the time, yet they still are able to land on the runway because they make adjustments. This is what we have to do. So constant monitoring, constant evaluation. Does this business make money? If you're not running this like a business, guys, it's an expensive hobby. So if you're not making money, why not? What needs to be changed? So for most of you, you are your own performance coach. You are your own performance coach. You have to be good at this stuff. So this is what I will do. This is my current journal of this. This is my current journal. And I want you I want you to observe something, that not every trade is a winning trade. There are losers here. There are losing trades here. There are losing trades here. And each one of these is a gold mine of information for me. I wrongly ejected a trade, like, oops, I made an irrational decision. I'm a human being. How can I prevent myself from making this the next time? So even though there are losses here, what I want you to understand is that the profit factor is positive, and we will get to this in a minute. I will show you what the profit factor is. So this is the type of data. This only takes me maybe 30 seconds for each trade to mark down this journal and for me to understand what I did right, what I did wrong in each trade. So most traders don't give the process enough time. They don't give it enough repetition. They don't give it enough practice to create mastery in their trading. Building a trading framework sets the guidance for these steps to success. And onward, on we go. We're now going to talk about equipment for a minute. Equipment. So you guys have seen all the broker commercials on TV, right, where a guy in a hammock is out in his backyard on a laptop making money in the stock market, right? So we tend to think that we can do the same thing. And in most cases, you really can. If you're just swing trading or if you're managing a portfolio, you can do this from a coffee shop. But guys, you can't do this with intraday futures, at least in the style that I trade. So you must have fast broadband without latency. You cannot do intraday trading with satellites and all the latency involved with satellites. Okay, you have to have a terrestrial network. If you trade off a technical system, you must have a fast workstation with lots of memory and a decent graphics card. If you do not trade off a technical system, you may be able to get by with way less horsepower. So I was talking to Don Kaufman about this. Don Kaufman does not trade off a technical system. He can do this off an iPad if he wants to. Well, that's the difference between somebody that trades technical versus somebody that trades off the numbers. So if you do trade off a technical system, you must have two monitors. You really can't get by without this anymore. Lots to keep track of. You've got market internals data. You've got different markets that you're looking at. Most decent laptops have no trouble doing this. Most decent laptops will allow a second monitor you can plug in. And some of these are even portable. I take one of these on the road with me. So you're not only watching the price in multiple time frames, but also market internals, other markets, so the actual transaction speed. So this is something that's very important. You're not competing against these high-frequency traders. You guys notice how nobody's talking about HFT anymore? It used to be like the evil incarnate. Oh my God, HFT, high-frequency traders. Let's ban them all. And now I think people understand, or at least somebody understands that they're not actually the enemy. They're actually adding liquidity. Bring them on. So be careful of brokers that hold orders on your workstation instead of on the broker's server. This is a very subtle little thing, but it's very, very important. It'll be very important to you if you ever notice that all of a sudden you become disconnected in the middle of a live trade. Not cool. So speed, stability, and being able to process lots of information are paramount. There is no other pursuit in trading that requires as much horsepower as intraday trading. Don't kid yourself. Now, you got to learn the DOME. The DOME stands for depth of market. And if you've never seen one of these things before, it's actually very cool, very graphical, very intuitive to learn, very easy to learn. You'll see the price going up, you'll see the price going down. No confusion like with an option chain where it's like, wait a minute, the strikes are going up as the price goes down. I don't get it. So there's none of that stuff going on here. The price goes up, the price goes up. And then you're looking to buy, or you're looking to sell. And you're simply going to place the order in whichever side that you want to. Now there's two different ways to look at each side. There's the limit order down here for buys. There's a buy stop. You can enter yourself into a trade in this direction, and then you flip that around. There's a sell stop down here and a sell limit up here. So there's only 4 different types of orders that you need to understand. And then you can add complex orders to that. And we'll talk about brackets and one cancels other in a minute here. So this is very important that you learn how to use. So this one, actually the Super DOME over here, this is a NinjaTrader. And this is the DOME for TD Ameritrade Thinkorswim, the active trader. So any viable futures trading system must include a way to get simulated data via replay. Many of you didn't even know that this existed, but you can actually replay an entire day of data. This is actually pretty awesome. This allows you to get more cycles, Repetition after hours. This is why golfers like Tiger Woods just sit out there and hit ball after ball after ball, even after they've played 18 holes of golf already. They're trying to groove their swing. Repetition is the mother of skill, guys. This is a required step towards success. Now we're going to get into the final section of our foundation, and we're going to start to really turn up the speed here. This is our trading niche. Our trading niche. Most folks that I know are desperately trying to be a jack of all trades. They try everything in the hopes that something will work, right? How many traders do you know that are like this? That, well, I trade futures and options and stocks and bonds and, futures options, and I'm trading, okay, so what's your main? What's your go-to horse? Well, everything. Well, this is where you become a jack of all trades and a master of none. Most professional traders prosecute and own one main niche, or known for one specific thing. Give me a ping, Priscilla. One ping only, please. Just focus on one strategy. So you got to find your niche. This requires you to focus on one instrument with one setup, using one framework that you set up based on your business and your trading plans, that you journal and inspect with detail on a constant basis. This is how you get a niche, guys. Finding your niche is simply a matter of finding the instrument or strategy or setup that gives you the rage to master. That's a great term that has been coined by a guy by the name of Brett Steenbarger, who is a performance coach for a professional trading firm. The rage to master. When have you ever had the rage to master? Remember something that you were so passionate about, you couldn't give it up until you found a way to master it. You've got to have that same level of commitment to your one thing, your one strategy. So you are that patient deer hunter sitting up in the tree stand instead of running around the woods, blasting away at everything that moves, hoping to hit a deer. This is how most of us trade. Now, I know many of you are going to say, but all the TV commercials said I have to have a diversified portfolio. Well, that's true. Ultimately, you want to diversify things. Most entrepreneurs do have 7 streams of income after all. So you do want to balance yourself out after a time. But if you want to excel at something, you have to relentlessly focus on one thing. Relentlessly focus on one thing. Exercise Curly's Law. If you guys have ever seen the movie City Slickers, there's a character in there by Jack Palance, rest in peace, who was the tough cowboy Curly. And he says, find your one thing only. The rest of it doesn't mean anything. So use your trading framework to achieve mastery in that one thing. Find your niche. If you don't know what your niche is, take the time to find your one thing, but don't waste money. Don't go out in the market and trade live capital trying to find your niche. It's a waste of money. You're funding somebody else's account. Okay, now we're going to go up to the next level. Research and development. I'm going to unleash the inner engineer in all of you. Stage 1 trading. What is that? What on earth is stage 1 trading? This is for research and development. This is where you develop your trading system. So look at this. So far, we haven't talked about anything to do with a trading system, have we? We've talked about some structure and some framework and some equipment and finding a niche, but we haven't talked about when to buy, when to sell. We haven't talked about what chart time frame to use, what instrument to trade, anything like that. So stage 1 trading is where we get into the nuts and bolts. So ideally, you build and test this on paper or a simulated trading interface. I know. You guys are all saying, well, I don't learn a thing when I sim trade. Okay, terrific. Go ahead and fund somebody else's account, right? What I'm trying to do is to get you to work it out on paper first. Treat it like it matters. If you can't get it to work out on paper, you're not going to make money in life. If you can't build an edge on paper, you're not going to be able to build an edge magically all of a sudden turn into live trading and build an edge there, right? So if you can't make it work in sim, it's going to be even worse in live. This is where I'll look to make specific profit factor before I earn the right to trade the strategy live in stage 2. I will talk about profit factor in a minute. So I will start, let me talk to you guys about what I specifically do. So I want to share with you guys a little bit about what I do here. So these are what are called Heiken-Ashi candles. Heiken-Ashi candles, no, not Heineken. Heiken-Ashi candles basically show you the trend, the instantaneous trend of what's going on. So green is up, red is down, pretty simple. In this case, the current trend is working to the downside. So what this tells me, I want to find a way to take a short entry here. So then I work over to what I call the signal chart. The anchor chart tells me what direction to trade in. It's my anchor. It's a larger time frame. It happens to be 25 times the size of my signal chart. So now I'm going to move down to the signal chart and trade that. So it's easier to float downstream versus paddle upstream, right? Everybody knows that. Everybody knows that you want to float downstream, go with the current, but why do we do this all the time? If we see a market doing something like this, if we see a market moving higher like this, why is it that we're continually trying to short that? Why is it that we're always trying to catch these little moves here when we should be catching the bigger moves here? Let's trade in the direction of the current. Let's not get caught in these little eddy pools, these little eddy currents over here. This is what we all do. So in this case, this is my signal chart. I'm going to be taking the entries off of the signal chart. This is where I would go short based on what we call the RSI-Laguerre study. This is the RSI-Laguerre study that we use with embedded fractal energy. It sounds really impressive, right? Okay, so here's this sample trade. And for those of you that have never traded a futures contract again, these are the entries here. Now, one thing I want you to notice is look how quickly this all occurs. So we enter this at 11:44:46. Approximately 40 seconds later, we have our first contract off, and that is the first contract. So we can actually split the exits of this. So both of these were entered at the same time short. Our first target profit was gone 40 seconds later, and about 4 to 5 minutes later, we had the second target off for 45 points. So plus 10, plus 45, so a $275 gross. I do want you to mention, not all trades are positive. There will be losing trades. I fully accept losing trades within a positive expectancy system. Anybody that tells you that they win 100% of their trades is probably paper trading. So I can also create tools to help automate these decisions. So I can put logic of the trading strategy into a simple spreadsheet tool to help me decide. So sometimes I will use this to, and let me bring the spreadsheet down in here so you can just take a look at this. So like in this case, the anchor swing, I wanted to change this to be short. Okay, so it's short. Now, do I have enough energy with that swing? Yes, I do. So the trade direction needs to be short. What about the 5x energy? That's okay, so continue to be short. Now, is the price above or below the 89 moving average? It is below, so go. It says go. Go ahead and enter that short position. So I like to use little logic tools like this. So if you can describe your strategy in a way that someone else or a computer could trade for you, what you'll find is you get to be more accurate. So now we need to talk about adjusting to different markets. Adjusting to different markets. This is called the ATR, or the average true range. And this goes from anywhere around 100 points a day on the YM up to recently we had 600 points a day on it. Now this is a totally different market over here versus what we saw here. I think we can all agree, right? This is a totally different market. You have to trade completely differently with a market that's doing this versus a market that's doing this during the day. Okay? We can all agree on that. So we need to make adjustments all the time. Again, this is why we have a steering wheel on the car. We have to drive differently when there's ice on the ground, don't we? So quiet trending markets have less trading range per day. Volatile corrective markets will have much more range per day. So a quiet and trending market is one where you're going to be like just kind of inching higher every day. We're inching higher. And a corrective market is one where it's like bam, 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 up and down like this. And it's going to have much more range per day. And in fact, even during one candle, you can see on a corrective market, you can see price going up and then going down and then maybe back up again and all over the place. You can have several different trends even within one day. This is what we're seeing right now, guys. This is the type of price action we're seeing right now. So you cannot trade the same in quiet markets as you can in super volatile ones. So even during the day, I'll have different types of market character. Let me explain that. Trends during the day tend to move into consolidation zones, then the trend repeats. So we can start off with a very choppy range-bound beginning to a day, and then all of a sudden it kicks into another trend. Range contraction moves to range expansion, but then it moves to range contraction again. So if you wait too long, if you wait for things to feel good, and if you say, well, okay, so I wanted to get on here, but I didn't get on there, and I wanted to get on here, but I didn't get on there, and I wanted to get on long here. Okay, now I feel fine about getting long right now. Well, guess what? It's too late. You've lost your chance. You need to focus on getting on board when it doesn't necessarily feel comfortable to do so. If you wait for things to be comfortable, chances are pretty good you're going to get in the wrong zone here. So this is a choppy zone in here. It's not going to be very much fun for most people to trade. So you have to be able to recognize what type of price action you are seeing during the day and when it changes. Now it changed right there as it broke above here. It changed into trend mode. Okay, so we have to adjust the market character during quiet and trending markets. There might only be one move. So this is what we saw the last few years, is especially during the quiet times, we get to the opening bell and all of a sudden, wham, you get a big move. And then it would just go dormant the rest of the day. If you didn't get that one move, you're out of luck, my friend. There's the closing bell. So during quiet and trending markets, we're not in one right now anymore. But this is typically 80% of the time markets are in quiet and trending. 80% of the time they're in quiet and trending. We just went from all the election. Actually, I take that back. It even goes back to the Brexit. The Brexit in 2016 all the way till early February of 2018. Almost 2 years of quiet and trending markets that we've had. So when we do have these, it's imperative that I stay focused in the first 1 to 2 hours. During volatile corrective markets, I'm going to see many opportunities. So it's more important that I define what's done for the day. Okay, the point here is you make your business plan goals while not trying to focus all day long, which is counterproductive. So I'm also going to adjust profit targets and stops to reflect larger or smaller intraday volatility. This is very important. Managing risk. Let's get to managing risk here. I want you to say this with me. Futures contracts are an unlimited risk trading instrument. There is no bottom. There is no top. There is only what's left of margin in your account. And if you hit that margin limit, they will take care of that for you. You must not run these positions naked or unprotected. Please do not do this. Every position should be placed with a target and a stop simultaneously. This is what I call, or this is what they call, and one cancels other, OCO, one cancels other bracket. So an OCO bracket, this is an example of an OCO bracket right now. So you'll see the entry here. We've entered the position here, and here is our limit. That's our limit target, and this is our stop down here. You can see this is a stop. You can see this is a limit. And this is by 2, which means this is a long position. So this is just a very simple bracket. It's very easy to do. One thing I should mention here is that if this limit is hit, so if you hit your profitable target, what it will do, one cancels other. So as soon as it hits this one, it tears down the other side, so you don't have any garbage left over. This is the problem if you do these things manually. If you set these up manually with a stop and with a limit up here, if your limit is hit, you can still have a stop set up. Guess what? If it goes down here, you can be filled, and all of a sudden you're back to an unlimited risk contract running around naked. There's an image for you. So some do not like to run stops in their system. Okay, that's okay if you're a disciplined risk manager, unless your market makes an exaggerated move or you lose your connection, which is not good. So in my previous life, I've had different platforms that I've worked off of, and most of those have been where my platform or workstation managed the contract, and that would lock up. And that was not fun because that took a phone call to the broker to clear the position. And that took several minutes. That's not good. Now we're going to get into stage 2 trading. We're going to get into the Kaizen stage. This is where we improve things. So by this point, you should have some results. You can't improve something if you don't have any results, right? Do your results meet your criteria that it's set up in your business plan? Have you earned the right to trade live capital? Stage 2 is where we actually start to trade live capital. This is the very first time that we're trading live capital. But guess what, guys? We have to earn the right to trade live capital. We have to meet our business plan goals. If we've not met our business plan goals, why are we trading live capital in the market? Now's where you got to really iterate. This is where I want you to have this sort of image of, there's hang gliding companies that you basically set yourself up in a tow rope, and there's a car that will keep driving in circles while you gain more and more altitude, and eventually you'll cut loose from the line. And I want you to think about that sort of analogy, is that you're trying to gain a thermal here. You're trying to improve the results of this every time that you go through this cycle. Learn something from every cycle. So focus on the profit factor. Here we go. I told you I would define what the profit factor is: a gross winnings divided by gross losses. That's your profit factor. Must be above 1. Think about this for a second. If your winnings divided by your gross losses is less than 1, guess what? You're losing money. You want this to be well above 1.0 to account for transactional costs. I believe an excellent goal to shoot for is at least 1.5. If you have a profit factor of 2.0, you've got a halo over your head. Your winning rate is immaterial. I don't care what your winning rate is. If you need evidence of that, read about the turtle traders, which the turtle traders would typically run a winning rate of between 20 to 30%. But they had an outrageous profit factor because they would hook onto these huge winners that they would hold forever, and that would pay for all of their losses and then some, and again. So this one metric will be your bottom line, is the profit factor to your performance. Keep trying to improve it. And use after-hour replays. You guys know that now repetition is the mother of skill. Intraday trading requires focus, decision-making ability. You can train on these skills after hours using replay software, or you can go old school like hard right edge. You guys know what hard right edge is, right? So you pull the price back and you click through one candle at a time and you make decisions on old price data. So there's lots of alternatives out there in the market. Thinkorswim has got on demand. Ninja Trader's got market replay. There's other brands and tools that are out there like Sierra Charts, and I don't know if TradeStation has been able to incorporate. There's lots of different programs to do this, guys. So by working after hours with market replay tools, you can get 2 to 3 times as many reps. Yeah, you can do, this is on demand. You can do after hours of replay. So let's talk about our mindset for a minute here. We're going through, we're just about done here, guys. We're just about done. Thanks for your patience. Trading is, the Yogi Berra did not say this, but he very well could have said this. Trading is 90% mental, the other half is physical. Seriously, I do believe that trading is 90% mental. It's not about your strategy. It's about you. It's about your mental edge. The subconscious mind and your belief system have a way of knowing whether you've done the work or not. You guys know if you've not done the work. You guys know if you're faking it, if you're just trading from the hip, if you're impulse trading. If you do not believe that you have an edge in the markets, you'll find a way not to have an edge. I will still remember to this day one of my trading partners, and this is back in 2006. He did not have a very good mental image of himself. He eventually did correct that. He became one of the best traders I've ever met. But he was not very good for a period of time. And I remember him entering a trade saying, here goes nothing. And how are you ever going to win if that's your mental attitude? Here goes nothing. The best way that I know to attain a strong mental edge in the markets is to work at your strategy, outwork the next guy. You can't just look over somebody's shoulder. You can't just shadow trade somebody and expect to make money with this. It does not work that way. You will find some way to take the trade off. So your trading mindset will come from reps. If you haven't figured it out by now, this is the key towards successful trading, is to keep going through repetition after repetition. And guess what? When you trade intraday futures, you'll have plenty of opportunity to do this over and over and over again. It doesn't have to be that many, but between the live trading and your after hours replay, think about this. This is the one part of trading where you can get more practice than anything else. And that leads us to our final section here, scaling up. Scaling up. This has nothing to do with fishing. Scaling up. So if you built a strategy and proven to yourself that you can produce a positive profit factor above 1.0, I would say at least 1.5 on a consistent basis, then there's just one thing left to do. Scale up slowly. Now, most traders do this the opposite way. They start big and they scale down after they start losing money. I want you to do this the opposite way. Start small, start slowly, and then scale up as you earn the right to do so. So dynamic money management is really the way to do this. This is where you can get into that exponential growth. You can apply this dynamic money management system that scales size as you create positive returns. So there's several algorithms that you can apply to fine-tune the risk to your own accord and reward to risk. So done properly, this is where you can get into that true exponential growth. But please do not employ this until you have a fully vetted positive profit factor system. Okay, we just got through the pyramid. So what's next? I've just shared a ton of guidance with you guys on these steps to success for your intraday trading. I will take your questions in just a minute. I know you guys have been very patient. Thank you very much for holding off on your questions. So I'd like to talk to you guys about a workshop that I'm doing this Saturday. So you get to sit with me this Saturday morning. If you want to get started the right way, take your skills up a notch, join my intraday workshop, intraday futures workshop this Saturday. Here is what we're going to cover. Let's talk about the 10 things that we just did. All right. Contracts and markets. We're going to talk about what contract you should be playing, and we're going to go into much more depth on what to play with these contracts and how to play them. Build your trading framework. Guess what? I've got a program waiting for you guys that you can start to do tonight if you want to start building your framework even before you get to Saturday's class. Number 3, equipment. What hardware do we need? What software do we need? How do we set this up? What's the best thing to do? What tools do we need to be able to trade effectively? Number 4, how do you find your niche? How to identify your niche? A lot of people come to me and say, well, what should I be trading? I can't tell you that. I don't know what's good for you, but I can show you how to find what's good for yourself. That I can do. And then number 5, stage 5 or stage 1 trading. Stage 5, number 5, stage 1 trading. What I will do is I will share my technical system. So I will share my technical future strategy based on chart fractals and the RSI Laguerre study with embedded fractal energy. I love that name. So I will go through my entire trading plan, business plan, show you how I set up everything, and then see if that inspires you to do something similar for your own trading as well too. I will show you how to adjust to markets, how to adjust your intraday approach depending on what's happening on the macro approach. So is it just a quiet and trending market, or is it sideways and volatile like what we have right now? How to be able to tune that macro or intraday shifts between trend days and sideways days. I'll show you how to manage risk. We'll set up those one cancel other orders, show you how to stay in the game, and then get up to stage 2. How do you get to stage 2? How do you earn the right to trade live? I'll show you how to do that. And then this is kind of my specialty, which is trading mindset, how to create that sort of placid, bulletproof, engineering sort of trading mindset. I just say that because it drives Don nuts. That leads to success. And then I will finally show you how to set up different algorithms and program those into your trading strategy to scale up using different, so either using fixed ratio or fixed fractional money management, which are state-of-the-art, very cool stuff. So here's the class. Beginner's Guide to Trading Intraday Futures. And I don't know if this is so much beginner's guide. This is actually, this is how to start and this is how to stay in the game. So I would say beginners, intermediate, and to some degree advanced. A lot of advanced topics within here for a beginner's class. I will be the instructor for this Saturday at 9 o'clock Central Time, 10 a.m. Eastern. Check local listings. Over 3 hours of live content. So usually we go a little bit more than 3 hours. It's very difficult to finish in that time. You'll get the slides, the replay video, the spreadsheets, the entry tools, studies, everything that I've showed you tonight. Broken down into 3 videos. You can listen to them as often as you want. Always available, will never expire. And then we got the bonuses. We've gone a little bit nuts with the bonuses here. In addition to the live content, the slides, the thinkorswim study, the watch list, the examples, the archive of the session, plus the ability to watch the archive video as much as you want. If you sign up today, these are the following bonuses that you will receive. Number 1, Futures 101 with Don Kaufman. So an interest to futures contracts. If you have never traded a futures contract before, this is the class for you. 2-part, 2-hour series by Don. Goes well beyond what others teach to beginners. And most advanced traders learn things they never knew. Retail value $100. That's bonus number 1. Bonus number 2 is my program, Fractal Energy Trading. You're never going to find this stuff anywhere else. This is how to use multiple time frames, how to trade with price action, how to evaluate energy within a chart. So this is a 5-hour class that I have. So this is where we use the things like the RSI Laguerre and the embedded fractal energy to understand expansion and contraction. There's no more of this overbought, oversold stuff, guys. So I think this is one of the most innovative and accurate technical systems out there right now. So making price a focus for your analysis means that you're never going to have another lagging signal. Retail value, another $100. Again, you'll get this tonight, and you can work on this for the next few days before you get into Saturday's class. Number 3, plan or get slaughtered. So I'm a big believer in structure and planning. You guys have seen some of this. This is a 3-hour class that I taught, about a year ago. How to attain the right mindset for success, which is very, very important. This is also another 3-hour one. Retail value sells for $150. You get that tonight. Start working on that tonight. No sleep for you. No sleep this week. Got a lot of work to do. Bonus number 4, building an intraday trading framework. I recently cut this because I wanted to prepare for this class. I wanted you guys to get a chance to download this, get through this, and be 100% totally prepared by the time that you took Saturday's class, because you'll have your trading plan, your business plan, everything set up before you even get into class. And then it becomes repetition, guys. Repetition is everything. So it's a 5-part video series, about 2.5 hours, the same trading framework that I discussed tonight. Get prepared for the workshop. This has got a value of $100. This is one of the bonuses that we're going to give away as well too. Here's the really cool thing. Guess what? If you sign up tonight, 1 month access pass to TheoTrade. You get to join us in the chat room for TheoTrade, as well as having access to the archives that are out there. So daily coaching sessions, we're on basically 5 to 6 hours a day with live instructors every day. I'm on at least an hour a day. Live trading chat room, so you can trade along with us. We've got different instructors, different traders doing different styles. You can learn something that fits you. And if you missed anything, so if you've got a day job or whatever, just listen at night. Every coaching session is archived. So we also have a start here section. So if you're new, or even if you're you're experienced, these 22 videos will get you started the right way. If you need studies, if you need scans, if you need charts, we've got everything set up for you for thinkorswim. So you can just download those. You've got all the studies, everything that we use on a daily basis in your 1 month access pass. So that's going for $150, actually worth a lot more than that. Okay, so what's the cost for all this? I know you guys want to know. So let's stack this all up. Futures 101, $100. We've got fractal energy trading, $100. Planner gets slaughtered, $150. Building an intraday framework, $100. 1 month TheoTrade cost, $150. Plus, you get the TheoTrade discounted TD Ameritrade rate for options, right? I don't know if this applies towards futures. I think it does as well too. So that's a total of $600 in bonuses, not including the intraday futures workshop class, which is this Saturday. So we will include all these bonuses if you sign up for the workshop class today for a one-time total of $199. That's it, $199. That's all you have to pay. TheoTrade.com/futures. TheoTrade.com/futures. So before I get to your questions, there's a number of FAQs that we normally answer at this time. So TheoTrade.com/futures is where you want to go right now. Is this a trial subscription? Will there be additional billing at some point? Is there a catch to this? No. You get 1 month, $199. You've paid for the class. You retain rights to all that material that you paid for. You can join us within TheoTrade for a month. No catch to it whatsoever. TheoTrade.com/futures if you want to sign up tonight. I don't have experience with futures. Will I be able to follow along in the class? Yeah. Plus the fact that you're going to get all that material before you even get into the class, you have plenty of time to catch up and get started with that. Can I use this with my 401k or IRA? Well, you can use maybe some of the fractal concepts with that, but you can't really trade futures in a 401k. But with some IRAs, yes, you can trade futures in IRAs. For the right broker, you can do that. A lot of people say to me, and listen up here, guys, because I know a lot of people want to ask this question. I work full-time. I can't trade during the day. Can I use this? It depends. Like if you're on the West Coast, the market opens up at 6:30 in the morning. Can you find half an hour to an hour of your day in the morning before you leave for work? Yes, you can. Or can you work flex time? Can you get a flex schedule? Can you get some kind of time? All you need basically is to find a window, especially in the morning. If you can find after the cash market opens up in the morning, and maybe it's not even 5 days a week that you're going to do this too. Just find a window where you can get part of this market because it's moving right now. I have a small account. Will your system help me? Any size account will benefit from the concepts that we talk about. especially the trading framework, the structure, the mindset, everything that I talked about tonight. Size is only a limitation of the mindset, right? Trading with a small account should only be attempted in stage 2 with proven positive expectancy system, using only risk capital. Otherwise, you're flying right over the tops of the trees. So I have a whole program on trading a small account, which is completely separate to this. But yes, you can trade futures with a small account, but keep it tight, guys. Keep it tight. TheoTrade.com/futures. That's where you want to go right now. I don't use thinkorswim. Can this system still help me? Look, guys, there's a lot of different futures trading platforms. You don't have to trade on TD Ameritrade, thinkorswim. Commissions are not the only story that's out there, though. So don't make a decision just based on commissions. Make sure that it's fully insured. And make sure that the order stays on the broker server, is not on your platform, not on your workstation. That is huge, because you only need to know about that one time. So compare your brokers very carefully. Okay, here we go. Beginner's Guide to Intraday Futures. What is the cost? $199. Don't forget. So just going through this, the access to TheoTrade, what I want to do is I want to bring up the live room out there. Nobody's broadcasting right now, but you can see the chat room that we have out there. You can see some of the archives that we have. The chat room archives, let's go out to today's chat room archive. You can see that we have, here's the March 2018 daily chat archive. Here's March 13th. We've got everything, every session that's out there today. Look at the number of instructors that we have. Oh, there we go. Okay, there goes Don. So this is what we do every day. Every single one of these is archived in high quality HD video that you can expand to full screen. You feel like you're right there. So we have all the archives. You can go out here and look at the shared charts and scans and study. Look at all the tools that you can download. These are all the tools you can download right now if you get signed up with us. So there are lots of resources out there, lots of archives. And with that, my friends, I will stand by to answer your questions. We're just a couple of minutes after the hour, so thanks for your patience. I will now answer your questions, and I hope to see you guys in the program this Saturday, TheoTrade.com/futures.